Over the last few weeks, we have been witnessing huge update after huge update around stablecoins. And I think that this is starting to become, a much bigger deal than what a lot of people are actually letting on, because what this is actually leading to is one of the most significant changes in financial history. And we have to address this, especially when it comes to XRP, because I do think that this is going to lead to the US officially adopting RLUSD and utilizing, all three, Ripple, RLUSD, and XRP to not just save the US dollar, but also to keep the US dollar in its reserve currency status. We have a lot to talk about, so sit back, relax. Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. Let's dive on in. And let's actually talk about some of the recent updates. Now, I've already addressed Russia. They flipped on stablecoins back on the 16th. Russian finance ministry calls to create its own crypto stablecoin. This was huge because, again, what this showed us was stablecoins are only heating up more and more. And a lot of these big announcements, like this one from Russia, accelerates everything. If you had a time frame in mind around, when stablecoin legislation is going to be fully in place, guess what? This just accelerated by a month or two. In my opinion, we get stablecoin legislation fully active by the end of summer. And from that point on, we are going to see stablecoins not just take a massive leap to the upside of the amount of money on chain, but we are going to see an accelerated, adoption cycle around stablecoins from the big banks and institutional players. But let's also go over here, because Dutch lender ING is looking to launch a euro stablecoin under the EU's MiCA framework. Again, we start to see, we're starting to really kind of witness a lot of these nations flipping on stablecoin initiatives. The EU, Russia, and it's not just those two, right? Abu Dhabi institutional giants team up for Dirham stablecoin. This was back in on the 29th. This was a big one. And again, this is a central bank regulated stablecoin as well that they're looking to launch. This is big. And also, I don't have, I'm not going to pay for this article, but the UK just exempted overseas stablecoin issuers from its crypto rules. Now, this one I'm going to come back to here in 1 second, but I also have to address MasterCard because MasterCard recently unveiled their end-to-end stablecoin capabilities. It will launch card with OKX as well. So this is their new global system, and it aims to make stablecoin transactions as seamless as traditional payments. And this is just showing us that the adoption cycle around stablecoins is just heating up more and more. Now, let's talk about this. Because why would the UK want to exempt overseas stablecoin issuers from its crypto rules? Well, it's the same exact thing that I think that the US is going to do. I actually think that the US is going to exempt any stablecoins from being utilized within the US. Now you might say, well, Nick, how could they do this? Well, listen, they could do this for anything outside of DeFi. But in terms of DeFi, no, they can't stop that. But the reason why I say this is because we have this update from the beginning of April. And Chad Steingraber actually posted about it. We have bring stablecoins onshore and protect the US dollar. RLUSD to the XRP ledger becomes critical infrastructure to the US. I actually do think that it will be. We have here to combat these serious risks, we urge Congress digital asset legislation to incorporate the following common sense principles. Number one is onshoring stablecoins to protect the US dollar and the treasuries market. Focus on that. That's the big one here. Number two, requiring platforms to only conduct business with anti-money laundering compliant platforms. Number three, providing for the registration of issuers and intermediaries to ensure accountability, transparency, and basic protections to the public. Number four, protecting against conflicts of interest. Number five, promoting price transparency. Number six, requiring platforms and intermediaries to actively identify and prevent fraud and scams. And of course, last but not least, disallowing digital assets in retirement accounts. Now, we talked a little bit about this when it got announced. But that number one is very important because of, one thing and one thing only, the treasuries market. Why is that important? Well, ITM Trading recently posted this back around like the middle of April. What happens if China dumps US treasuries? This is still a big concern, right? It's still a big concern because, yeah, they do hold a lot of power around US treasuries. And this could definitely be something that they threaten us with around tariffs, for an example. We know that China has not been liking the tariff game and they've been playing it as well. But, when we really look at this, yeah, China could easily dump treasuries. So what's the answer to this? Well, we're going to talk about that here in a second, but check out this video clip from ITM Trading. I believe that this got posted on their YouTube channel as well. Check it out.
Could you see China saying, okay, US, we're going to dump our treasuries and we're going to dump our US dollars? Then what?
Who cares? I mean, seriously, who are they going to dump their treasuries to? They're going to sell it to somebody. We're not buying them. So is Russia going to buy them? Japan's? Somebody in the world has to buy those treasuries. This is the exorbitant privilege of being the world's reserve currency. And it's the one thing that I think it's one of the things I think Trump is putting in danger. We have the exorbitant privilege of getting stuff from the rest of the world. Nike shoes, t-shirts, chips, whatever. And they take our dollars. I mean, Trump says we don't export anything. Yes, we do. We export dollars. Now, we also export more than we ever have. We manufacture more than we ever have. But we export dollars, and they get those dollars, and they've got to do something with them. Typically, they ended up at a central bank, and the central bank ends up buying treasuries. But a lot of times it ends up in people's hands. They say, we want to buy your stocks. Part of the reason, 19% at the beginning of this year, 19% of our stock market was owned by foreigners. You think they're not pulling their money out? That's part of the reason we're having the crash, because they're losing confidence. They're not certain of what's going to happen. And if you're an investor and you're facing uncertainty, what you do, you pull back, you stop, maybe you move. There are other places that look less uncertain. And so I'm not worried about China saying, we're going to dump your dollars. To who?
Okay, well, let me ask you this. Could they be like, forget the dollars? Well, we'll sell it for gold.
Well, they could put it in gold, sure. And China's buying gold. But who's going to sell them that gold? I mean, those dollars still have to go somewhere. They still have to buy. I mean, say they go to London or Switzerland, they buy gold. Those dollars are London and Switzerland's problem. They're not coming back to the U.S. Nobody's selling gold here.
So yeah, I mean, listen, when we think about what's going on here, are we at risk with, China? A lot of these people want to say that, oh yeah, we're not at risk at all, and who cares if China's going to dump, the U.S. treasuries? I think that it is a big concern. I think that we should be concerned about this, and, I think that the U.S. is even concerned about this, and the way that they're going to counteract this is through stablecoins. Why? How? Well, we have over here, this is actually from Uphold. The CEO of Uphold posted it, and then Uphold actually quoted it. We have, by 2030, stablecoin issuers could hold more than, U.S. debt than Japan or even China. Decentralized finance, centralized collateral, the future of money is getting very real. And we have down here that by 2030, stablecoin issuers could hold over 1.2 trillion in US treasuries, surpassing the largest sovereign holder today and marking a new concentration of government debt. And yeah, this is wild because, right now we're at 120 billion roughly. That would be a 10x growth within 5 years. I think that that's extremely doable. In fact, it might even happen sooner rather than later. And the reason why this could happen, and the reason why this probably will happen, is because of the stablecoin growth and accelerated, adoption of stablecoins. I just showed you guys all these headlines. That's just a few of them. Look up stablecoins. I guarantee you that there's an additional 5 or 10 more articles just like that. But what's also crazy is we just talked about how stablecoins now represent 1% of the global money supply. This only grows and grows more and more. And it also accelerates more and more as more individuals, retail, and even institutional players tap into stablecoins. In the last 6 months alone, the market cap around stablecoins surged over 32%. So think about that. If we're starting to see this type of adoption now, imagine a year or two from now. That's why stablecoins are such a big focus from my point of view. I think that stablecoins are extremely overlooked. I think that the value around stablecoins right now currently is extremely undervalued because of where they're headed. We know that Congress has been talking about stablecoins heavily, right? Even going back to March 13th, stablecoins give us an opportunity to continue US dollar dominance across the globe. You guys know about this. I played this clip on the channel already. I don't think that I need to play it again, but I will. But what's very interesting about all of this stuff is we look at some of the recent launches. RLUSD, was not just launched out of nowhere. I strongly believe that it was coordinated, especially with what we saw happening around that time. I talk about the meeting that Ripple and even Stellar had with Nelly Liang. Circle was also there. Chainlink was also there. Those were the only players actually at that meeting, alongside Nelly Liang, where they were exploring how they can integrate CBDC's tokenization and even stablecoins within the US financial ecosystem. And then now we have Congress talking openly about how stablecoins are going to give us an opportunity and advantage to continue US dollar dominance across the globe. Now, do I think that, this will happen? It's hard to say. With all of these additional stablecoins launching, I think that this is actually, a financial war through tech. I think that, a much bigger, war's happening here, and it's a tech race. I think that's very similar to the space race, right? Where we have stablecoins. Who is going to have their stablecoin launched officially first? Who's going to have their stablecoin dominate the financial landscape first? And I think that this is going to lead to almost every single nation having their own stablecoin. That way they don't have to utilize any other stablecoin. And then you have that neutral bridge currency, that's crucial for all of this to actually become a reality right there at the center point, which is why I do think that XRP is going to benefit greatly from all of these stablecoin initiatives and discussions ongoing. But check out this video clip.
I believe that stablecoins in particular give us a real opportunity to maintain dollar dominance across the globe. And we've talked a little bit about use cases, and as a policymaker in general, I might not be concerned about the way that someone in Mexico, Panama, Peru, Nigeria, or another location is engaged in transactions. But what we actually see is when Stripe has a neobank in Mexico, or Bridge is used to distribute payments to workers across Latin America, that actually strengthens the US dollar. Would you agree? Can you comment on that briefly?
Yes, I think it strengthens the US in two ways. One, many of the companies engaged in the activity you're describing are themselves American businesses, and so they become stronger. But secondly, and I think this is what your question is getting at, it increases dollar demand, increases the demand for US treasuries, and it in turn lowers US borrowing costs.
I believe that.
And yeah, the treasuries are the focus here, because the stable coins like RLUSD or even USDC, they support treasury buying, growth, and this is where we think about what is the next step. Well, the next step is having the US officially integrate stablecoins within the banking sector, which is why we have all of the, banking obstacles getting cleared up. The OCC, the FDIC, the Fed approving it, SAB 121 being rescinded. The banks are next up on the list. They're the next ones to adopt and, really start to, integrate stablecoins within their business model. This will also streamline transactions in the banking sector. I think that this is going to be a game changer. I think that this is going to accelerate modernization of the US financial system, which executive order, we just had an executive order back in, I think it was March, that got signed into law by Trump that is, a step for us to modernize our financial system through digital wallets and digital currencies like stablecoins. So when we think about what's happening here, yeah, I think it's only a matter of time until we start to see RLUSD, Ripple, and even XRP become a much bigger piece of the US system. But I also think that this is going to lead to the entire global system erupting around digital currencies and stablecoin initiatives, which only reinforces XRP as a neutral bridge currency, like I've stated in many videos over the past, like 3 months or so. Because again, a lot of people wonder, how can stablecoins impact XRP in a positive way? Like, what's the value that stablecoins have for XRP? Well, the value is the fact that XRP is a neutral bridge currency. So it doesn't matter if there's, a euro stablecoin or a yen stablecoin or a yuan stablecoin, they all still need a bridge, because they're not going to be like, I'm not going to be able to transact my, USDC for my yen stablecoin if there's not a neutral bridge currency that's right there connecting the two, settling it at, 3 seconds or less. and at a fraction of a penny. That's what we want to see. And that's exactly how we get to streamlined payments, modernized payments, and our global financial system itself can be fully modernized through those initiatives like that. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe to notifications on because I'm free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.